Dear guests, dear distinguished thought leaders, it is an absolute honor to welcome you to this high-profile roundtable on global markets and family office investment strategies. First of all, let me apologize for the technical problem that we are having with the screens with the name of Ms. Cyril Costas and the picture that doesn't match. And let us start the roundtable. Today, we convene at a time of rapid transformation in global investment landscape. Family offices with their long-term investment horizon, strategic capital deployment, and access to exclusive deal flow are playing an increasingly influential role in shaping the global financial markets, driving innovation, and fostering sustainable economic growth. The question before us is no longer just about preserving wealth, but about creating lasting value, leveraging the family office model to drive impact, capitalize on emerging opportunities, and navigate an ever-evolving financial and geopolitical landscape. At the helm of this distinguished roundtable, it is a leader who embodies expertise, vision, and global acumen. Our chair for today's discussion, Mr. Chris Sanborn, partner at Ex Nihilo Ventures. Please join me in welcoming Chris Sanborn, with over 30 years of experience in business development, financial analysis, and operational management for multi-generational family offices. Mr. Sanborn brings a wealth of expertise in private fund architecture and strategic growth initiatives. Mr. Sanborn, the floor is yours. Thank you.
You got to get way close.
There you go. Thank you for such a wonderful introduction. I'd like to start by having the panel introduce themselves, and then we'll launch into a discussion primarily around economic growth, economic management, but leaning more towards the philanthropic and how we as either venture, private equity, and or family offices are contributing into whether they're impact investments, philanthropic contributions, B Corps, whatever the case may be, and kind of see where that takes us.
Hi, I'm Cyril Costas. I've been through a few things, starting with oil and venture capital, private equity, real estate, and trying to balance between these areas the investments and capital at hand. Obviously, it's a very challenging world today. But I think with challenges come opportunities, and one of the things we'll discuss, I think, is maybe venture and how the big funds today are full of cash but not investing and leaving a lot of space for family offices.
Hi, Chris. Whoa. Hey, Kush. Can you hear me? Good. Sorry to call you out. Chris Rogers, I'm representing Knollwood, which is a very large U.S. family office that was started in the early 2000s, a decade after the family had sold their businesses to Procter & Gamble. Speaking primarily here about our venture platform, which is a multi-billion dollar platform started 30 years ago when we seeded a fund called NEA, which is sort of the grandfather of all US funds. And in our context as a US taxpayer, we were lucky enough to have had the founder of the company put the shares in a trust vehicle. Today we have 99 trusts all managed internally, but that also requires us to have a large philanthropic focus. And so I think we're well suited to help comment on this.
Thank you all for having me. My name is Ana Lucia Lind. I'm a banker and financial advisor from UBS and co-founder and CEO of Swiss Financial Engineering AG. Out of Switzerland. I'm located as well in Dubai. I am a strategic advisor to government, bridging between industrialized country, emerging market countries, and helping government in fundamental growth via vision of stabilities and infrastructure, industrialization with high focus on energy. Across the family office, as an ex-UBS, has been part of our platform from the private banking side, where I have been out of Germany and the headquarters in Switzerland. Very happy to be here at AIM, being before to the conference in Dubai, and let us rock it. I think the market is at a spot at the moment where everyone are interested to hear how the vision over the other side of the ocean will be beyond the situation we have today, what tomorrow will choose us all. Thank you all for having me once again.
Hi, my name is Sander Wigman Mortensen. I run a family office, and we focus a lot on deal-by-deal investments and co-investing with other family offices, pretty much in any state and region.
Hi, I'm David Tolomesh, entrepreneur turned investor. I specialize in DeFi, which is the blockchain economy. Think less crypto memes, more institutional infrastructure, borrowing, lending markets, that kind of thing. I invest with my two brothers. We're looking to set up our family office at the moment, and it's a wide range of investments that we're looking at. I've always specialized in technology, future ventures. Just come back from San Francisco, where I met with some of the kind of darlings of VC out there. And yeah, I'm a DeFi specialist, Ned of Dinero, and working with Nomura's digital asset arm.
Good day, everybody. My name is Joseph. I am from Switzerland, and I represent Axioma Wealth Management, which is a classical Swiss asset manager, mainly focusing in the fixed income landscape, but also a little bit in equity, which maybe we will hear about with the turmoil going on. We'll see how it will go today. But that's the one hand side, and the other one is one that led to the other one, that is the Swiss Trust, which is a classical Swiss-based trustee. That was necessary to found because the tax landscape and the transparency landscape in Switzerland or all over Europe changed dramatically. One company 17 years old, the other one's 8 years old, and that will be interesting to hear what my colleagues have to say on different topics that we all care about.
Hello everyone, my name is Danilo. I'm from Zagreb originally, living between Dubai and London. For the last 10 years, I have two businesses. One is a multi-family office based out of Geneva, Switzerland. And another one is a private equity business headquartered out of London. We invest in real estate across sectors. And in another arm is venture, both for last 10 years. And obviously very happy to be here and exchange opinions. Thank you.
Thanks, everybody. So I guess I will kick it off and kind of set the landscape as far as the family offices and how we kind of decide on the channels on where we want to, whether it's the impact side, looking at reduced economics return, but looking at that second bottom line, and or just straight out donations. So we've actually, part of our holdco, am I still not getting out? Part of our holdco, we've established our own fund. We invite companies doing primarily in education, food issues, food insecurities. I'm inviting them to participate and submit requests for grants, and then we issue grants and donation to these funds on an annualized basis, which gives the matriarch of the family something to do, so she's not completely bored out of her mind. But also puts a little bit of structure on where we play, how we play, and what we're looking for. So I'll kind of start that off as feedstock and pass it around.
On the B Corp side, there's one thing. I think that initially people were ready to get less returns on B Corp and environmental and sustainability, et cetera. Not anymore. And this is not dating, obviously, from the present government in the US, but it was even previously to that. I think there's been a shift, and people want returns, even on environmentally sustainable companies, on B Corps. Knowing that the B Corp label isn't as strong as it was, But I think we're done with saying, oh, we are ready to invest in environmental friendly companies, but we're not looking for returns. And we have environmentally focused companies that do give good returns nowadays. And I think that's a big trend which has changed maybe in the past three years, I would say. I don't know.
And I think we look at it slightly differently. And again, because we have these trust structures, we have dollars that necessarily have to go into some philanthropic endeavor, and it can't all be the latest McLaren into our auto museum. So it isn't all sort of crazy philanthropic structures, it's real philanthropic structures. And I think we've always had a more generous view of the metrics around what have become a really metric-driven type of investing. And so we've rejected most of them. We've watched them all change. We've watched the relative importance shift. But it is important, and we decide as a family through the trust vehicles which areas we want to allocate. And I just mentioned there's a second side to this, which is areas we won't allocate to, whether that's weaponry or things, which I think is the other side of the coin from directed, thoughtful investing. And then the last piece related to this, because we do redeploy some of that capital, we do have buckets that have a slightly lower IRR threshold when we look. So we might back a climate manager when all of our analysis shows that the compounding is going to be a little less than a top Israeli cyber manager. And so there is a slightly different threshold to that, but there's a commercial return expected, and those funds are, I mean, their LPs are looking for a commercial return.
Do me a favor and talk a little bit more about the slats and the blind trusts and how you set up that infrastructure as disparate buckets for your philanthropic and or your impact.
Thankfully, I have no idea. We have in the 85 people that run the office, there are 12 full-time in-house trust officers distributed between the states where you must have these trust officers to have the right tax situation, and we have probably 8 lawyers. And so I know how much goes where, but the actual structuring, some of these trusts are 300-year trusts that will be around for a long time. And so we don't have the issue of how to get into it because everybody who's alive today was already bound by a trust. So we don't have the mental leap of, gosh, are we going to commit this money? It's gone, can't control it, that others do. And that's a tough mental leap for a lot of people.
Chris, we just realized that over here we didn't understand your initial question. Can you roll it out for us once again?
Absolutely. So the focus is how we as venture, private equity, and or our family offices deploy and identify how we deploy our philanthropic dollars. So, you know, different families, different PEs do it in different methods, whether it's, you know, holdcos, it's slats, it's trusts. How do you guys go about it, and how do you choose where you deploy capital?
From the perspective of today's market, I think every family office will embrace a technology to be synchronized in the stands up with your certainty of the market. And it's easy to see that AI will play for us the major decision in how you want to deploy your investment. And as the colleagues had just mentioned, tax play a great role in when you're going to invest your asset. You're going to look on long terms, and creating investment probably directly in direct investment, you are more secure than public market. From that perspective, I would say when I go in private investment, I'm holding the management of those investments. I'm frequently upon those markets. But if we go in the bubble we are at the moment with public market, almost more appealing, attractive. And even AI oriented will say you could buy today. I could be mistaken. If I have an opportunity in the private market, I will go there. And for all, I think longer, longer existing family office may have longer portfolio of assets that they are able to divest or take off the portfolio to create asset. I may be answering you in a double face, but the reason why I say this is because today the market is a bit uncertainty with tariff, with policies. So family office does not have it easy because no one wants to go into losses in this uncertainty of the market. You want to be able to stand. So you will have to make a diverse market. And if you think the market growth globally, it is stable at 2.8 for 2025, but the uncertainty of policies and no harmony in the basis within nations at the moment where we are heading to, we don't have a great vision. So is the 2.8 sustainable? Are we going to have a correction? So I think for the moment, we have a diverse path to go into. And I think we all will figure out our strategy in a tailor-made situation. So beside all what I have said, we will go back to that unique platform, using technology, deploying knowledge, and strategizing for family exact need.
So is it an overwhelming, I guess, assumption that with the things that have taken place in North America, in the United States in the past 125 days, of moving almost away from a globalization position, more towards a nationalization position, and creating fear and increasing that uncertainty on where we play, or do we just sit back and watch? Is that kind of where you're sitting right now?
I mean, awareness has to be thrown out to the market. And it would be unfair from my side to be the one to dominate and say it is not there. But I think the colleagues from the American side could deploy that sentiment more than me. I see it here from a global context that dialogue is needed. If you call it on a global group from the European Union to the American side, if we take it from industrialized market into emerging markets, we need to get out of this hot zone we are at the moment. We are so unsettled that tomorrow everything could go onto another side for all emerging markets, because the unsettlement in financial side for emerging market with non-great leader is a health on earth for people. This is going to carry us to a backward backflash. We're going to be talking about industry plashing down because they're not able to get money. And if tariff is one of our policy dictator today, then tomorrow we're going to wake up in a health situation. Money is the king, and if industrialized country cannot control it and cannot have it, then emerging market is going to be conflicted. We need to go into a peace zone, a dialogue, a harmony in the basis, and a governmental correlated situation. And we are not seeing none of that. So I do think there have to be somebody intelligent on the table who don't have the babbler animals to fight, but to create the peace that is needed. And I look on the world today with an eyes of demanding that somebody comes up and say we could do it together. We don't need to be in this fight. We could tribalize the market in a better way, because we are heading for a cyber war just on tariff. And if this is the first one in 100 days, then we're going to have 100 more in 4 years, and it's not needed.
You're very depressing. On that, Chris, you wanted to chime in?
Well, only to say that from our perspective, we are 70% US, 30% rest of world in our investing. We don't see, as we look through our team, we're not really anticipating making any major changes today, next week, next month. This is not the most stable leader that we've seen in the world and not the most consistent, and also not the one who is bothered by the truth, and meaning that tomorrow we could see, because all of his colleagues who he does listen to have lost their shirts, and those supporters, the toothless red hat wearing ones that he relies on, don't give a shit either way. But one thing is clear, they don't really want a job in a steel mill. So this idea of bringing all that back is, eventually going to sink in with them too. He's going to, raise his hand, believe it, and declare victory because he got 14 phone calls while he was playing golf from foreign leaders, and that'll be enough. And this is too much hard work. So we are not ignoring, and we're cash rich, and we are distributed across a lot of asset classes that are protective and stocks that are dividend paying. But I think as a globalization factor, we don't believe it's going to stick.
I think that's fair, and I think I see a lot of that. That's probably the most politically correct description of not very stable that I've heard in a long time about our fearless leader. But on that note, Sander, talk to me.
So in relation to impact and not impact investing and so on and so forth, I don't really believe in those buckets, because if I say I have an impact bucket, I'm also saying I have a bad impact bucket. So I believe more in, when you do business, to do operations and the business that you invest in, such that if it shows up on the front page tomorrow, you're okay with it. I think that's a much better way to generally approach this kind of business, because if you again approach something that is this is philanthropic, this is impact, this is going to be a small bucket. Really, to have an impact that's positive on the world, you want it to feed through all your businesses in terms of being proper global citizen and of ecosystems and people and all that kind of stuff. And that's really how I look at it. And you can say, what are the metrics that guide that? I think that's the internal codex you learned when you grew up. It's not something that you can quantify. Yes, you can quantify sometimes. Do we reduce pollution? Do we do X, Y, Z, all that kind of stuff? That's more like operational goals, I think. But from a sort of strategic perspective, where is that more that I am sitting, I think it's all about, when you're doing something that's worthwhile. And generally, I believe the businesses that are being built today, that's going to be sustainable, not from a environment perspective, generally economic sustainability. I think they're going to have to be sustainable on all levels going forward, because that's where the marketplace is going, that's where customers are demanding, and so on and so forth.
Yeah, it's interesting when you look at the sustainability side. The company that I just sold, or I took public, we are in a consumer product space. And it's interesting to watch how some municipalities we're moving away from plastics. We don't want plastics. You can't have it in our airport. You can't have it, in any of our communities. But it's also interesting to watch the number of municipalities that have created recycling program that nobody participates in. So it's great to go out there and talk about it, but 80% of the communities are too lazy to take advantage of it and actually make it work. So we'll scream at the top of the mountaintops, yet we won't put more stuff in a blue can because I now have to separate it for something else, which is, it's interesting to watch the consumers.
Yeah, thank you. I would say in terms of philanthropic and impact investing, you really have to align capital and purpose, and maybe redefine your definition of a return. In terms of impact, ESG, ESG is an interesting one. I think everyone focuses on the environmental element of ESG. The social and governance often gets left off. And that's somewhere that blockchain economy really makes a huge impact, with a lot of companies utilizing DAO structures. So these are decentralized autonomous organizations. And essentially this democratizes access to governance across a large company just by holding the token of that project. So that's something we haven't really seen before, but is a great way to add capital into the sort of infrastructure. Yeah.
But there is one thing about impact investing. I mean, a lot of people do this, right? So they can go to sleep at night and they're happy they've done impact investing. There's two things, though, with impact investing. One of them is when government gets their hands on it, like the European governments, which united and said, we're going to do a battery factory, I think it's in north of Sweden, which I think the investment was in the range of 50 billion, which went bankrupt. Government-led, went bankrupt, but everybody was happy because it was impact, it was battery. And then the other question is, which you don't often see, when you invest and want to do impact investing and environment, when you do solar, when you do wind, no one ever looks at the rare earth problem. Where do the rare earths come from? Why is it that Europe is full of rare earths, but no one mines them? Because it's the most polluting industry in the world. I mean, mining rare earths is more polluting probably than cobalt and DRC. So where is it done? It's done in China. And there's a very good book which was written by a French author, Christophe Pichot, I think his name was, said The War of Rare Earths. You have regions in China which are mine rare earths to produce batteries, to produce other things, which you cannot go today anymore because they are poisoned. So I think when you talk about investing in impact, investing in the environment, you really have to go all the way down the chain, which is not done very often.
No, I agree. And I think one of the other things, at least in the United States, when you talk about alternative energy programs, wind, solar, whatever the case may be, we're saying we're doing well by doing good. But at the end of the day, most of the families in NRPE that get into these things are there to also take advantage of the incentive tax credits. So they're saying, great, I'm doing well, but I'm also raking it in the back end by having a cost avoidance exercise because of those incentive tax credits. So no, thank you.
I'm not sure I have a lot to add on this topic. I think what Sandra, right, said is true in many regards. Maybe it is because of my background, being Swiss and being in the industry for 30 plus years, and I can openly speak about that, but mainly Russian clients. So they have other problems in life the last 30 years than just ESG or impact investing. But I think it's not only that. It's as you also mentioned. It's not so easy to do, and especially in Europe. I banked a lot with Credit Suisse, and then what happened with Credit Suisse and some of that stuff they did. It's not that easy. It has its own pits, and whether you can really analyze that in depth when you build general portfolios is questionable in my honest regard. I need to look that the liquidity is there, that a certain diversification is there, and I kind of never spend extra time to look into that topic. And at one point, I think maybe 2021, it looked like they would even force us to have a certain part of our portfolios in that compartment. And I think that topic should be off for the next 4 years because of a different person now, right? So this also changes all the time. And I've seen a little bit the exposure in solar stocks last year or lithium stocks in the US last year. They get absolutely trashed. I mean, we speak of minus 40 to minus 70% in certain companies, even though they were doing more or less okay. So it's also a tricky topic.
Well, we have a different experience in different countries. So, for instance, over the last 3-4 years, we did some focus on social impact investments. So, in particular, here in the region, we invested in healthcare and health tech sector. And apparently, if you look at statistics, 30 to 50% of the population in the GCC countries have chronic diseases. Diabetes is like 12%. So we decided that we go this path. We invested into clinic development, into drug deliveries, and also in the food as medicine sector. And because we thought we can manage this to the end, right, in a way. Commenting on Cyril's earlier comment. And on other side, we have real estate investments in United Kingdom, which where government brought up green agenda, and they introduced the laws where you have to compensate for instance, we built like, I don't know, 100, and this is a real example, 600 units residential, and we need to compensate with investing into some fields where birds and cows will live for next 100 years and no one will ever build anything as a compensation to us producing biological waste. And ultimately they introduced the law. They didn't introduce the mechanism, and everyone in the region was stuck for 2 years. And many developers in the country went bankrupt because they couldn't hold it. So they didn't deliver the execution mechanism for the green agenda. So we suffered as well, and this is huge. And the country has a housing problem, right? And you're bankrupting developers through this inconsistency on how you bring up this green agenda. So I'm looking at it from two ends, and then in the end of the day, I thought, okay, what we do, we will invest. We will invest in social impact, in the stuff that we can and understand that can be delivered, like school, like ed tech, like health tech, like healthcare, and try to avoid to be hit by bureaucrats and governments that are introducing green agenda just because it's like popular, but without actual actual thought, deep thought on how it will work.
Hi, how are you doing?
Yeah, you did get a chance to introduce yourself.
Yes, Piers Dunhill from Dunhill Family Office between Switzerland, UAE, and the UK. Just listening about impact. Everything that we invest in is impact focused. So talking about the housing crisis, talking about green energy. We don't touch oil and gas. We don't touch mining. For example, we have an amazing project which I think is all families around the world can be a part of. We have a regenerative forestry project. So we have the fastest growing tree in the world. And so when you cut it down, it grows 10 times. And so we're growing these plantations around the world, not just for the carbon credits, but for the regenerative timber. So now that Trump's just signed this order to cut down all these trees in the US, it's needed more than ever. So we're losing 15 billion trees a year. And we have a solution for that, which I call it the family tree. So all family offices can be involved in working together, and not just on impact, but projects that are economically viable as well. So that's our focus at Dunhill Family Office.
Great, thank you. Yeah, from our perspective, we got to the point that defending a double bottom line became too difficult, and that impact just didn't make any sense for us. So we set up a disparate trust, if you will, that we allocated money and we find the things that we're passionate about and we just deploy capital. It saves the headache, it saves the battle of saying, okay, great, your impact, defend that part of that contribution. And a lot of the things that we focus on are mental health. I spent 11 years Spec Ops for the U.S. Navy. So there's a lot of my brethren from the teams and from Spec Ops that suffer from mental issues. So we focus a lot on mental health. The elder communities, I think, throughout the world are the communities are becoming so large that there's a lot of them that have become forgotten. And education, and those are kind of the three buckets of the three lanes that we play in. But I think the next 4 years are going to be a telltale with regards to how aggressively we continue to chase those based on what goes on in the United States, which is I'm not as bullish on as some people seem to be. But did you add something to add?
No, I wanted to say, I think the force of family offices and private capital in philanthropy and is to go direct and invest. I think you have institutions, you never really know where the money goes. It's fine, government can fund them, but the force and the power of family offices is to go and to do projects like education, like what you were talking about, and really to go at the root and to see where every penny goes. And I've seen, we've done things in culture, we've done things in medical space in Africa, because we work a lot in Africa. And it's very important to see where that money goes. And family offices can do it and they have the capacity to invest directly. The big UNICEF and others where you don't really know where the money goes, I mean, you can leave that either on the one hand to governments or on the other hand to people who don't have the power to do full projects direct. And I think that's where family offices really have to go, investing direct in projects where they see where the money goes and where they can assess and control.
So when you're looking at investments, and Chris, I'll ask you, when you're looking at opportunities or looking at investments, do you look at, at least for the larger, do you look for those that have established corporate social responsibility programs within their organization for themselves and for their employees?
No, we do not. That is not really a bar. As I said, there have just been so many different versions of that we look for the right people with the right mission, if that's in our philanthropic bucket or even in one of our sort of quasi buckets. We do tend to focus a lot of that activity, particularly globally, on the venture side. So for getting into direct things like, Johns Hopkins or something that needs a building or feed a program in Africa or grow some more trees, I mean, that's done, of course, but in terms of investment, in emerging markets, you get some of your double bottom line by simply training a VC and an entrepreneur, and they may totally fail, but it helps build that ecosystem, which eventually can create returns by moving whichever region's economy into a more knowledge-based economy with an entrepreneurial spirit. And so we can't quantify that, but we do absolutely focus on that.
Perfect, thank you.
I'm going to go back a bit to what you just asked before, the impact in this case. I think every one of us here and everyone on this planet Earth impact someone in a different way. And in terms of investment, we're privileged because we have the opportunity to seek how we want to make an impact in the daily life. For all, on my side, in the guidance to government, strategical advisor to government, when I realized that sometimes in leadership, some countries just blind out because election place somebody in that position. If you just stepped into a country and you start to talk with the leader, you will see the impact you could create. I do charity. As we discussed it today, I don't place it in the social media. It's not my main factor. I don't like to be that. But if we starting to talk day by day, the small investment, and I don't want to go in a diminutive, but just the investment that we could bring into country and the impact we could create. Is it from governmental to government? Is it from family office to government? Is it private to private? There is huge space to create an impact. I had a discussion as well back in COP29. I was discussing on the panel. ESG is very good for the market, but it's criminalized the emerging market. It's money that is not there. It does create an impact. It does educate people, but it is really a dominion on the society. When I'm going to put $3.5 million in an audit for ESG, where in country like Guinea-Conakry or somewhere that they have no factory, I am putting a pressure in the government on an investor who want to come in to create an impact. So I think our impact has to be relative to policies. And these policies are coming from somewhere in the European Union. It's coming from somewhere to somewhere else. And you have just said before, it is in us, our DNA, to create this impact on society. And we could do it individually, we could do it together in group, we could do it on a social impact way, but for all, I invite the world to do it with government. They need the impact. And when they learn leadership, if we copy-paste the leadership of the Middle East into many other countries, we have the biggest social impact on planet Earth because we start to create harmony within us. And this is missing on 54 countries on the African continent. I had been there, I live it, and I say to my government, there are going to be a lot of African here that doesn't accept it or will relate to me, and I'm not an African. I just want to say I will love someday to go along with everyone who wants to do an impact, to go into Africa, South America, and Caribbean. Share the knowledge of doing good in a relative way and compatible way. And don't let us take it on a policy for investment. Mass housing is something I love to do for government. This is the greatest impact you could create. It's not every family office will bite on it. And the reason why, because it's risk for them. So to de-risk that, we have to manage government interests. And I'm quite sure you all who are sitting on the table of the family office will see it day by day. 100 project comes in, you select one of 100. Why? Because the risk is too huge. And who is going to help you to de-risk that situation? So I think our fundamental talk about impact today is not only the selection of how we invest in the higher if we doesn't do mining. In Switzerland, if we touch a mine, we will never have a bank account because it's totally adverse to the market situation. So we have to go into diverse investment to come back to create impact. And one of the main one is energy. And I love it because through energy, you create an impact on industrialization. But again, without government, without policy, we create no impact. So we need the one, which is government knowledge, know-how and support, and we need a right policy for investor coming into that country. That would be my view on it.
And that's the difficult part. And I'll say this just from personal experience. The government has a tendency of, especially in developing countries, not knowing when to get out of its own way. When we built our school in East Africa, as it began to thrive, the government decided to come in and say, great, the land that you're on, you now have to buy it and you have to pay taxes on it. Yeah. Now, it's not enough that I'm educating and feeding 500 of your girls and giving them an opportunity to go to that next level, but now the government wants their piece of the pie. So again, to your point, there's got to be policy, but also a contributive factor that they bring to the table to provide value, not extract value. And unfortunately, in emerging markets, they don't know how to do that yet. Chris?
I don't think there's any solution to inefficient government that's misdirected. And their perception of, somebody who can fund a school is somebody who can also provide more capital. And that's you when you're in, I'm stopping myself from saying emerging markets. We might as well just say any regime. You run the risk of government intervention that might have started positive and moving negative because they have bigger fish to fry than a school. And so we don't anticipate problems, but if it happens, it happens. You move on and to the next project.
All right, so we've got about 10 minutes left. Is there anything else that anybody wants to throw out there? I mean, we kind of bounced around a lot of different subjects. Anything anybody want to comment or bring to the table that we just plain missed? Sander, come on, you're itching.
Yes, more of just something I noticed after having maybe 20 meetings with different VC funds over the course of about 2 weeks or so. And this is more of just a comment, but the London-based European VCs, there was almost a depression compared to the American VCs that I then went to. The difference was just night and day. Although with the markets being so brutally red today, maybe that has changed slightly. But yeah, I've just found in terms of governance, that was quite indicative of the kind of mindset behind a lot of these guys. And the difference coming out of Silicon Valley is just almost one of euphoria, to be honest. They're so excited about really I think the three kind of elements they're all going towards in sort of deep tech is AI, robotics, and quantum computing. At one point, when one of them solves one of those elements, probably quantum, the change that's going to come from that is going to be so astronomical. I don't think we'll recognize the world in 20 years' time. The analogy is if you came from the past and you were from 120 years ago, you wouldn't recognize the world today. Potentially in the next 20 years, people around this panel won't recognize the world. I think the impact is going to be so great. But yeah, in terms of the governance, that just the difference in mentality was so extreme to me.
Now, I was going to say, navigating government policies is probably one of the most complicated things. So when impact and ESG started being the, what we call in French, tarte à la crème, the fashion thing of back in, let's say, the early 2000s. Now, today, and Pierce, I fully, the fact that you guys don't invest in arms or energy is great. But what do you think of the fact that all the European governments now are creating funds to invest in weapons? I mean, where are we? And now the biggest thing, before banks were not supposed to invest in arms. And now you look at, when I hear the French government, I'm like, what is going on? Because the one thing that they want is for like all of the cash, which is in like the deposits of the people, goes to fund arms and the arms race. I mean, where are we? So is this what we call impact? Because it's for the supposed to be good of the people? And so navigating all these policies, which are always changing, it's a nightmare. And I don't know if anyone here is going to put money in these European funds or whatever they call, but it's ridiculous.
I will say, I will ask everyone, and I will bid on everyone's table for us to say no. We have seen it from the American side. Billions has poured into Ukraine. What have it made upon impact on human life? It have extended a war. And if we go back to the past history, Mandela, 27 years in a jail, he came out and he said, put away your weapons. Let's go to peace. And the conclusion is that peace doesn't bring money. And everybody always use the war to create assets. And it is a shame upon our society. It's a shame on that impact. So I'm happy that you brought it up on the table, because that the law allows such fund to be active. It should be out of our ethical, professional behavior. We shouldn't permit it as financial institutions and as bankers to even support it. And I'm quite sure I do cross-border security, but from the motion to protect borders, but that to invest into war directly, raising funds, I'm not going there. And I'm quite sure anyone come to me, it's going to be a no. And I bid on all of you have the opportunity, say no if you can. You don't have to say it to me, but it will be good not to bid for it, because it brings us nothing. It take away life and the impact is zero. The impact is for those who produce it, but not for us in the financial market. The return is there, but our conscience is totally dirty and undermined. That's what I see about it. Thank you for the topic. I love it.
I might make a comment to that. You hear of the expression, to not prepare for war is to make it inevitable. So if you don't invest, you don't prepare for war, you're inviting it. So I think it's extremely important that we do take care of our own defense to exactly make sure we don't get into war.
But what do you think of the change in government policies, which one year you have to invest and the next year you shouldn't invest because it's bad? And the same with banks. Banks, I come from oil, I was traded. So today, banks are not supposed to finance oil anymore. So if banks don't finance oil, where do we get the energy from? I mean, and the weapons, regardless of whether you approve or not, it's, for me, the change in policy, which is very difficult to follow.
And I will say to this, I think it is a governmental responsibility. When we are invited to make money upon human life, we became exposed to be one of those cannibals. And we cannot earn money upon taking away life to be fruitful on the market. So I do think there's a huge opportunity, but we cannot be one of the weapons to create weapons. AI is going to be our net weapons. It's going to take the money into this industry. If I am asked to be participated, I say no. And I will say, I thank once again our colleague to say it shouldn't be. And I agree with you, we have to prepare for the non-announced situation. But that's my government. That's a social, political responsibility, same as education, same as healthcare.
I don't want to take this down a rabbit hole, but back to your point with regards to quantum computing. You look at some of the biggest investors in quantum computing and AI, data gathering and data mining. It's the CIA, it's DARPA, it's clandestine services. At the end of the day, you know, quantum computing, if you look at intrinsic contributions, you look at cyber, you look at everything going on, these are all weapons of war. These are all going to be weapons of war. So you got to be really, really thoughtful on how you categorize that and where these things come into play.
Yeah, interesting point. When I met with, I won't say the name actually, but one of the leading privatized quantum computing manufacturers out in Silicon Valley, and when I asked him what he was most excited about solving when he finally solved quantum computing, he said that the kind of weapons, American defense was what he was most excited about. And I just thought that was like a fascinating take on, you know, what the ambition is.
Can I just jump in for a second? The panel that I was asked to speak at was family offices, how venture investing, not other investing, can impact. And I would just like to bring it back around to the positives. Some of the areas that you're talking about meeting all these VCs are the ones that could transform the lives of many of the people that we're talking about. And so if you look on the positive side, families are not going to change whether governments are investing in weapons. Families could change whether there's a vibrant VC community that's investing in things that can be helpful. So I'll shut up, but I think that was the topic, and I'm pretty bullish on it.
It was, and we moved away from it quite rapidly. But yes, point made. We've got about 5 minutes left, unless anybody's got something to add. Questions? That makes life easy. Gentlemen and ladies, thank you so much for your time. And I guess we're off.